Kai Hoffmann, CEO of Soar Financial Group, is back to talk about the best and hottest investment opportunities within the resource sector. Kai, welcome back. You are an expert on junior mining financing activity. In fact, you track this in what's called the Uranium Index. Tell us about the latest findings of this index. What does it show? Where are the trends headed?
David, thanks for having me back on. It's always great to be back on Kitco.
My pleasure.
And thanks for introducing the Uranium Index. It's been interesting the last few months and the last few weeks in particular as well, as we've seen trends change a little bit. And then the buzzword has been sector rotation a little bit. We've also seen that in mining, as we've seen more copper financings or base metal financings, and also more uranium financings as well that have taken the limelight a bit from the gold and precious metal space for the time being. Last week that we've seen a bit of a trend change again as well. Like our index was primarily dominated by gold financings. And while we're not back at the 100 level for the index, and you can go reference it at oraninc.com, but we're at healthy levels, and we're definitely ways away from the bottom in our sector, and it's not as grim as you might expect out there.
Generally speaking, how do financing activities this year compare to that of last year? I know last year we had a record number of deals in terms of volume and money raised. How does it look this year in comparison?
My gut feeling, I have to run the compound numbers, but my gut feeling says we're a bit slower. I looked into BC numbers and they were about 20% lower for this year. Also, it has to do with seasonality to a degree. We haven't seen a lot of flow through financings, for example, yet. And we're also still waiting for results for some of the companies. So you can't raise money unless you know what you're going to do with it. And waiting for results is a big part of that as well. So the industry has been slower. A lot of the financings and money that has been raised has been more at the higher end of the market, meaning more the developers or early stage producers.
What are flow-through financings?
They're more only Canadian investors, unfortunately, can invest in flow-through shares unless it's charity flow-through, and we can go down a deep rabbit hole. But it pretty much means that you, as the investor, can write off the exploration expenses of the companies because the companies don't generate revenue. Investors are allowed to write off those against their own taxes, and that's sort of what that flow-through is, and charity flow-through credits are.
And all junior mining companies within Canada qualify?
They have to have the projects in Canada. So it doesn't matter if you're headquartered in Canada and have a project in Guyana, you're not flow-through eligible. Okay,
let's go back to the fact that you brought up that financings have been coming back to the gold sector away from as compared to other metals. Why is that? Is it due to the gold price? I wonder if there's a relationship between the number of financings and the level of the gold price.
There definitely is a correlation. It's not as strong as you might think, but we definitely see that. Copper has been running to $4.30 a pound, so that took a lot of interest. Obviously, we've seen more copper gold or just pure copper companies finance as there was more interest at the time. Same thing with uranium. We've seen quite a few uranium financings, and now gold is at the forefront again as well. We're not really breaking out, but copper has been taking a break. We're barely trading above $4 a pound, so investors are looking at other opportunities again right now.
Do you think this interest back into gold is a short-term temporary spike, or is it sort of the beginning of a trend right now? Because I'm looking at the gold price; it's still down on the year, and it's been flat for the last month. So I would suspect the interest back into gold financings isn't due to the price of the metal itself.
No, I think it's what overall is happening. And on Thursday or Friday, we've seen PPI numbers with inflation seem to be finally kicking in. We're expecting CPI numbers tomorrow. So there's an overall interest in gold itself. Same with Bitcoin as well. I think we ran over $60,000. And I don't want to talk Bitcoin, but I think it goes a similar trend. Yes, we are down today in gold. I think we're trading at $17, $20 right now as we're talking. We're down about $20, which is not great, which is not a massive, I think it's more just waiting to see what's coming out. It's the long-term trend is very, very much intact in gold. And that's why I think those gold companies are able to raise that kind of money they're raising right now.
I've been talking to analysts and economists, and one of the common themes I've heard in regards to metals prices, not just for gold, but other base metals as well, is that the bullish case for the resource sector right now, or resource metals in general, is that there's going to be more demand than supply can catch up to. And I find that interesting because when I ask these experts to drill a little deeper on this topic, they conclude that there isn't enough supply right now because there isn't enough investment interest. And so if you don't have enough investment funding into the sector, they're not going to be drilling as much, which I find kind of like a chicken and egg problem, right? I mean, there isn't enough supply because there isn't enough investment. Well, you're not going to have investment if there isn't is an activity to begin with. The price isn't going to go up. So anyway, do you see that as a major impediment to supply growth, the lack of investment into the sector right now?
Yeah, there's a massive lag, especially in the base metal space. As you know, like decent copper mines of size, they're billion-dollar capex projects, and exploring for those, drilling out a porphyry is expensive. And as we're all aware, until like early 2016, and that's when it only started to happen, we haven't seen any inflows into the junior exploration companies. And those are like the venture capital startup companies, the Silicon Valley juniors, right, that are paving the way. We're seeing Microsoft buy Nuance Communications today for $20 billion. Well, they started pretty much like an explorer. You got to start somewhere, you got to develop a project, bring it to a certain stage, but that all costs money. And money might not be patient enough in that regard because it takes time. And we are unfortunately living in a very, very fast-paced world. I think COVID accelerated that, and we expect results tomorrow. And sometimes we don't have 3-4 months to wait for drill results, which is unfortunate.
I do wonder why financings this year have been lower relative to last year. I mean, I understand the price of gold is lower, but it's still not low by any absolute measures. It's, $1,730 right now. I'm looking at the latest price. It's not, by any means, it's not a low price for gold. We've seen much lower in prior years, haven't we, Kai?
Oh yeah, we have, and that's what I mean. Like with the Ornic index now at 65 this week, this is still healthy in my opinion, because we benchmarked it to January 2011 when the market was the highest it's ever been, pretty much, right? There is interest. Like, unfortunately, we're still competing with an S&P 500 that goes from record high to record high. I think the S&P it had marked 5 record highs within the last 6 trading days, which is ridiculous. Trying to get that retail investor to switch over into gold or gold stocks, it's going to take a bit of a crash or at least a scare to get more interest again.
Okay. All right. Well, let's talk about investments in the resource sector. You and I have discussed how to pick the proper investment for you. But let's talk about the reverse. Let's talk about specific qualities or characteristics of gold mining or any mining company that you would actively avoid.
Quite a few, actually. I'm not sure how much time we have here on this format, but
take your time, Kai.
No, it's with any sector as well. Like, of course, it starts with people, right? So it's easy to do. Everybody's got a LinkedIn account these days. Go look at people on LinkedIn and see if there are gaps in their CVs. Have they worked on something before, right? Are they maybe? And we talk mining, and I'm primarily focused on junior mining. But what have they done before they started their own mining company? Did they run an esports company, a cannabis company, or biotech company? Like, where's the expertise in the company, and do you trust that expertise? I think that's the first one already. And then, of course, earlier stage companies, you can look at cap structure. And of course, like, how much did they pay for a project? Was it an arm's length transaction? Where did the shares go? Was it a numbered company that got the shares? Those are all red flags, for example.
And just on management, before we continue, do you usually prefer management with a background in geology or a background in finance?
Oh, that's a tricky question, because you can have a great boardroom geologist, but those are far and few between. So generally speaking, more finance background, while backed up by a very strong geologist in the boardroom who can talk shop.
Mm-hmm. What about financials? Let's say you take a look at their report, their annual report. Would you notice any red flags just by looking at their financial statements?
Marketing spending in terms of in comparison to exploration spending. I think that's a big indicator. Are they spending more for marketing than the money that goes into the ground? That's a red flag. Why are they doing that? And is the marketing effective? Are they getting actually the share price higher? Are they able to dilute less? That's something I would take a look at as well. There's justified marketing expenses, but they're far and few between.
Mm-hmm. And generally, when it comes to valuations, how would you determine if a stock, a gold mining or a silver mining junior company is trading at fair value? Would you do the valuations yourself? Would you consult a third party? I mean, how would you make that decision?
So it really depends, like what your interest is. It depends on the risk level as well. The more junior you go, the higher risk you can get, and the multiples are more interesting, right?
Yeah.
I don't look at the Barrick Golds or so. There are experts out there. Those are not for me. Like, that's where I draw the line, right? But I'm interested in small juniors, companies that produce 70,000 ounces a year. They often trade at a discount because maybe their mine is in a jurisdiction that's not tier 1, like Canada or Nevada, for example. Mm-hmm. That's where you can do that your own due diligence. And I don't mean like, don't cut out the investment advisor before you make a decision, but those are the easier ones. And then, of course, you can look at track record of management and then see why they do have a discount discount? Is there a lot of debt on the balance sheet? How much are they paying for their debt? And again, we can go down deep rabbit holes on certain metrics there as well. But it comes down to, can they actually deliver on what they've been promising over the past few months?
Yeah. Generally, when you're looking at exploration companies, what is the preferred outcome for you? Are you looking for a buyout, or are you looking for them to develop their own projects somewhere down the line?
Comes back down to management. If you have an engineer on board, like even as a chairman or a board member that has done that before, I don't mind the exit becoming a producer. But you'll need to see in 99% of the cases, you'll need to see new management team come in before that actually happens. So for me, the preferred way obviously is an exit, ideally at a premium, and depends on who the acquirer is, not just in shares, but cash would be nice. Okay. And that would actually, like maybe to follow up on that would be fantastic for the sector, because that money would circulate then back into other stocks as well.
Mm-hmm. I like to just back away and talk about the mining sector as a whole and some of the major challenges facing the entire industry, not just for the juniors, but also seniors. I'm lumping them all together. I know that resource depletion is something, a long-term issue that many investors are concerned with. Here's my question, Kai, is that when resources are nearing the end of their life cycle, is it not more expensive to drill the last bits and pieces of ore in the ground? And if so, wouldn't it naturally be, wouldn't you assume that a company towards the end of its life would have lower and lower margins because the cost would be higher? Is that a fair assumption to make?
Probably is. And I'm just like, since you lumped the big and the small juniors together, it's really interesting because there is a difference, because on the junior side, we're more forgiving for shorter time mine life, because companies are more flexible, they're more dynamic, they're more the speedboats, right? They can quickly buy a project, integrate it, while for a Barrick or so, it needs to be of massive scale. So let's talk Barrick, for example. Like how important is a 20-year mine life, for example, or reserve life in comparison to 10 years or 8 years? Like, and that's really interesting, a discussion we had here in the office. Like, what do the generalist investors want to see? The reason why Newmont, for example, has been outperforming Barrick is because they listen to the generalist investors. They raised their dividends, I think 3.5% right now, and they outperformed Barrick, and they actually went up against the trend the last few weeks. And that's interesting to see. So that comes down to a discussion. Like, there has to be an overthinking of strategy and general alignment with the markets. And
for the junior side, do you see no risks of margin deterioration sometime down the line?
Yes, of course. If you don't fill that up, you will have to drill it. You'll drill yourself stupid to a degree, right? And it does come at a cost. And at some point, you got to say, okay, this horse is dead. We can't kick it anymore, right? There's nothing coming out of it. So, and that's when usually companies start looking at other assets, or they at least have a couple projects in their exploration pipeline that they might be able to bring on board or online within a few short months after the main asset depletes.
Okay. Kai, let's close the conversation off by talking about metals prices now. I know you don't see gold heading much lower. You said to me a couple months ago that we'll need to see unicorns in the street before we see $1,200 gold again. So give us a brief outlook on sort of your gold forecast, and also how does it compare to your outlook on some of the other metals? Which metals are you most bullish on right now?
So gold, I think I stand by my thesis. We'll still need to see unicorns before we crash 40% lower, right? And I still can't see that happening. I'm quite excited that we bounced off the 1680 level a couple times now. That seems to be holding that trend line. I'm generally optimistic for gold. Like, if you look at the macro environment and statements that are being made, inflation is now kicking in. Bond yields are fairly stable right now, but there's still no real yield possible. So it all bodes well for gold and silver to a degree as well. We hear central bank buying out of India is going very, very well. I think you guys posted an article this morning about it as well. So there's lots happening on the gold space to be optimistic about. And if you want to take a step further, there's the U.S. just mobilized their navy to the Ukraine. Russia is rattling their sables. So there's a lot of factors that go into gold. Copper, I'm very bullish, of course, because we are all following the U.S., the Green Wave Initiative, infrastructure spending. So that's key, of course. That's going to be dominating the headlines. And same with nickel as well. All the major car manufacturers are talking about going electric. You will need nickel for your batteries. That all bodes well. I think we're all trending in the right direction. I'm not sure if we're just at the beginning of a massive super cycle, but the trend is your friend.
Yeah. I do have one question on uranium, since we're talking about other metals. Now, I've learned through talking to some uranium producers that there's currently no production in North America right now because the price is too low for mining to be economical. Is that something you've heard as well, Kai? And if so, I wonder why the price of uranium hasn't moved up, because the demand, from what I understand, hasn't gone down. It's just the supply has become non-existent.
That's a narrative I'm still scratching my head about. Like, yes, everybody's building, like apparently China's building 30 new reactors, and where are they sourcing the material from? Like, after Fukushima, a lot of plants shut down, so there's a little oversupply still sitting at some of the nuclear power plants. But I don't get it. Like, Denison bought 2.5 million pounds of uranium recently as part of their process of going into production. I still need to figure out why they bought uranium while they're becoming a producer. Right? That's something I'm scratching my head about. They say that's part of backing up their financing package. They have some physical assets in inventory that they can bank against, which is a really interesting statement because they bought it at market, right? So the uranium narrative is an interesting one because I don't 100% know where the supply is coming from. But at least Cameco is restarting Cigar Lake, which was officially shut down due to COVID-19 reasons. Yeah. So we'll see what kind of impact that is going to have later this year. I forgot which quarter the project is going to be at full production again. I think it's later this year, Q3 or Q4. And curious to see what that impact is going to be on the uranium price.
And finally, the SF Online Session 8 is happening this week, Kai. Exciting stuff. I was honored to be on your show on the program last time in Session 7, I believe. You invited me as a keynote, so thank you for that. And you have a great lineup of keynote speakers this time. Lynn Alden is there, Tavi Costa, both fantastic macro economists I've had the privilege of speaking to. So should be interesting. What's on the agenda this time?
So as you said, like it's tough to top you having you on SF Online Session 7 there, but we managed to get Lynn Alden and, as you said, Tavi Costa as well. Fantastic macroeconomists. Your guests or your viewers know that. But we also have 9 different mining companies. I'm really excited about the prospect of those companies. And I'm going a bit on a limb here, but I'm quite excited about what they can achieve in the next 12 months in terms of share price appreciation. Some of the companies had out fantastic news the last couple of days as well. So check them out, like Aurelia's Resources, Signature Resources, just to name a few. I'm not going to name all 9, but I'm really excited. It's a free to attend event, soarfinancial.com/events. It'd be great to see you all online.
Yeah, and you probably get asked this all the time, but generally speaking, when you've been talking to people in the last couple of sessions, what is the sentiment like? Are people sort of optimistic about where the financings are headed, or are they, more pessimistic given how great it was last year, and it's a high bar to pass?
I'd say it's neutral still, but what impresses me the most, investors are more educated because of all the great online content that is out there now. So I think it seems like they have a bit more better grasp of where things are headed and where they're at in the cycle right now.
Okay, fantastic. Well, thank you very much, Kai, for coming on today, and good luck with Session 8. We'll speak again soon.
David, thanks so much.
Thank you for watching Kitco News. I'm David Lin.